Are you blowing accounts, but you feel like you're a good trader? Are you consistent for a month or two at a time, and then in one day you go entirely red and you've tilted and you've lost everything, mentally depressed when you go home at the end of the day thinking this whole game is rigged or it's impossible or you don't know what you're doing? You're actually wrong. You probably are a good trader. If you can consistently trade every day and then one day you're blowing your accounts, the reveal isn't necessarily in that red day, it's in all those days. And here, I think, are the three reasons why you are probably losing those accounts. So first off, if you're trading prop, which you probably are, if you're watching this video, and specifically if you're trading NASDAQ, you're probably watching this video, then let's cut out the first two. A, sizing. If you're inconsistent, if you're not taking home regular paychecks from trading, stop trading full-size contracts, right? You're not Patrick Whelan. That guy, he can do it. He's been doing it for a long time. He has a lot of buffer. He also has the ability to continuously buy more accounts, probably way more than you and I do. He's a great trader, but you're not there yet. Second, dollar cost averaging. If you're dollar cost averaging and you're inconsistent, just stop doing it. If you're iffy about your initial entry, then just wait for more confirmation versus well, I'll go in now, and if it dips, I'll start to dollar cost average in, and then if it goes a little further, I'll dollar cost average, and maybe I'll try to get out of break even if I'm wrong. But on the NASDAQ, especially the slippage, the wicks, you're just amplifying your losses. And if you're starting off at your minimum size, let's say you're being smart, 50K, and you're trading, 3 micros, and then you go 333, you're at a full-size contract. And by the time you get to that full-size contract, well, you're already deep in the red. And so now where are you going to go from there? Are you really going to cut your loss right after the third buy? Or are you going to let that third buy go in and then kind of hope for a little bit of slippage there before it goes back up and either make a huge amount of profit, which you're being hopeful about, and then not losing the account, which you most likely have or will? If you can cut out those two things, you are going to become far more consistent and probably get to that paycheck. The last thing is just a matter of steps. And I'm going to tell you personally that it is always going to be difficult. Trading is never going to be so easy that you go in and you're so disciplined all the time that you never go on tilt, you never mentally break from your process. Yesterday, I lost a Take Profit Trader account, and then on my other Take Profit Trader account, I made $500-600. So how did I go from, well, I just lost this account, and then I go to my second account and I make $600? I'm going to show you. So first of all, let's remember step one, step two. If you are in the 50K accounts, definitely, and this goes for inconsistent traders, don't trade full-size contracts yet. Just trade a third to a half, right? 2 to 5, probably even more so 2 to 3, and I promise it can make money. Second, don't dollar cost average in. If you feel like you're about to do that, just wait for better confirmation. And that takes us to just taking that trade, right? So if we look over here, here are the 6 steps that you want to take. And this is still going to mean that you'll lose trades, but this will prevent you from having the big blow up day. Because what's happening is if you don't follow these steps and you're a good trader, then all of those green days are the days that the market sided with you. They sided with your analysis, essentially, which says, hey, you're reading the market well, and you are taking the trade, and you were correct in that analysis. But if you're not taking these 6 steps every single time, that one time you're wrong and the market goes against you quickly, that's the day that you blow the accounts, right? I mean, that's really it. You kind of get in trouble. You have a mental stop loss, and then suddenly it's well beyond that. So then you think, okay, well, I'll dollar cost average in, and that way I'll lower my average, and if it comes back, I can get out for a smaller loss. But then it keeps going, and now you're down 50% of your account, and immediately you go into Hail Mary mode, and you're like, well, F it. I'll just kind of hope for the best. The second you become hopeful in the red, that's when you've lost your consistency as a good trader. And this is where discipline steps in, and this is the stuff that you have to do every day. And yesterday, I didn't take these 6 steps in the one account. I DCA'd and became hopeful because I didn't follow these 6 steps. I lost that account. I had to move on, take my next account, and go, okay, I need to get back to following my 6 steps. And when I did, boom, $600 later, I'm done for the day. I still sucked to go home. I didn't think about the profitable 600 I made. All I could think about yesterday was, Why did I lose my discipline? Why did I lose my process? So I wrote it down. And personally for me, if I remember, I'll put this, I'll link this down below, but I'm going to print this out and just kind of stick it on my computer. And this will help sort of fortify, right, my steps to get into a trade. So number one, know the macro trend. Daily, your 4 hour, your 1 hour, up, down, sideways. That's pretty easy. You scan out, right, or you zoom out and you look at the charts and you say, which way is it going? Well, we all know the market has just been going up. So we're in an uptrend. Two, define your area of interest. When you define your area of interest, what you're looking for are multiple confluences. So examples of that are value area highs, high lows, initial balances, support resistances. Ideally, if you can get any of these together, then that's fantastic. If you can get previous resistance turning support on top of the initial balance high, that's a great confluence, right? If your value area high from yesterday, the premium, is today's value area low, which is a discount, and we're uptrending, that is a bullish direction. That's a nice multiple confluence. Support resistance, if you can't find any of these and you're in between, but you have a nice strong 15 1 hour multiple 3-point support or resistance that is showing a hold, great. All right, you have something there. You have structure to say this is where buyers are stepping in or this is where sellers are stepping in. Now next, you have your confluences, your area of interest. You know that you want to enter here. That's what you're waiting for, right? You're staying out in between. Next, now that you've hit your area, is define your stop first. This is the thing where I tend to get caught up at. I start looking at where I want to go, where I think I want the market to go, and I kind of forget sometimes, where is the trade invalidating at? So say, okay, well, I'm going to go in at the initial balance high on a retest. Great. Where is this going to invalidate? Well, you want to look to your left. You want to see if there's a previous swing low that you can target, or you want to try to find maybe another confluence, such as, if you've got halfway down the initial balance, you're still bullish. If you can fit it in there, defining your risk first. You just want to find somewhere that the trade invalidates, right? Now that defines your risk, which yields your size. So if you're on the 50K accounts with any prop firm, and you have a 25-point risk, right? 25 points to your stop loss, you have to define how much that is out of your account. 50K, that's $2,000, right? You probably only want to trade a half contract size at most, preferably maybe just 2 or 3 contracts. You're going for minimum a 1-to-1. You don't really want any less. You don't always have to shoot for more. 1-to-1 makes a lot of people a lot of money. I do like Brandon Trades always says 1 to 1.15, which is kind of smart. You're always a little bit more than your loss by just a few ticks. I do sort of like that. So minimum 1-to-1, and then just make sure your size is in correlation to how much risk you're putting on the table, right? 50K account, probably try not to risk more than $200-300 at most. Right? So that means if you have a 75-point risk, maybe you shouldn't take the trade, but at most you probably only want to trade 1 contract, not 1 full-size contract, 1/10 of a full-size contract. And again, that target should be 1-to-1. So let's take a look at yesterday and see if we can just find something, which essentially I already know what we're going to be looking for. So this is the hour trend. This is yesterday here. We're going to jump down to that 5 real quick. I'm leaving all of my today's drawings off. And what I'm going to do here is I'm going to put on the opening range 30-minute. If that would show up, that would be great. Let's make sure that's there. Okay, that looks good. And we're not getting anything yet. If not, I'll have to do this manually. Bear with me. Let's see if it shows up. Still doesn't show up, so we'll have to do it manually. All right, we're just going to go do this manually. 5-minute, 30 minutes. So let's go over to the 30 real quick. And here it is. Big bullish candle. Boom. right here. Okay, see where this yellow line is? We'll change the color on this so it's a little bit easier to see. We'll go blue. Now let's go to the 5. Oh, there it is. Look at that. That's what we wanted. Let's take that out. Right? Perfect. Okay. So yesterday, right here, I have the 30-minute range. Right here in the gray box, that was your 30 minutes. This red here, this is post the 30 minutes. Let's look for just one simple trade for the day. We see we came back down. All right, we started to hold the bottom of the range here. We played around in the middle a little bit. We started to come up. Ignore this value area low because this is set for the end of day or for today. What I'll do is I'll take off these lines here, not to be too confusing. And that's why I want, that's why. So we don't want that, but we just want to hide drawings. There we go. All right, now it's less confusing. So you're going to go for, right, hopefully multiple confluences, but you're going to define. So we see here, right off the open, we drop down. All right, so we know that we already have an opening line here, which is crucial for the beginning of the day. Down to the bottom of the 30, we start to break out of the 30. We're moving away from the initial balance high. We start to come back, and what do? We tap the open, kind of almost sweep it down just a touch. We sit right on top of the initial balance high. Basically enough, that's multiple confluences. If I add in 2 EMAs, the 14 and 50, even better, we get our crossover right before. That's 3 confluences right there, right? So 50K account. Let's be on the conservative side. Let's say, well, you don't want to dollar cost average in. You don't want to trade too small. You want to trade full size with just a simple stop, right? You know it broke down, but does it have enough gusto to keep going up? So at the close of this, the most conservative thing is you want to break above. This is the 5-minute chart, remember? Break above this candle here. So let's just say you go in at 322. Currently, that's 277. That's 50 points right there, right? So I would say probably 2 contracts. And again, not full size, right? You just want 1/8. So you go 2 contracts, and you go in at 23. Well, what's nice about the Lux Algo here, which is what this is, it gives you your initial target, right? So its initial target is essentially 400. Now you can look at it 2 ways. If you don't have Lux Algo, that's fine. You can say, okay, where was the last initial break, to the downside? Right here at 60. This is where we had a bunch of sellers come in right here. We also see we had support, and then it fell through. So you could just target 60 here. So what does that mean? At just around 20, you're going to say, well, initial target 1 will be 40 points. You're going to need a little bit more than that, right? If you really want to be down here, 50, so you want to go a little bit higher. So we're going to need to essentially target the beginning of this fall here, which is right about here, 394, which Lux Algo lines up with at 397. So now you're sitting between about 320 and 400. All right, now we're looking pretty good. That's an 80-point move. Once you start moving, especially once you start breaking past these wicks, good idea to take your stop, and let's bring that stop at least to half, if not break even, right? Now from here, you want to manage the trade. I'm a person that I don't like too much of a pullback. This pullback here, it got to 375 and we're saying we're going to target 396. This is a really big move. If at this point I've secured 0 loss, I've moved my stop, then I'm probably going to take this. Now I would say on this big bullish candle here, if I believe this is still really bullish, I don't want it to go halfway down past this candle. So it looks like here, I'm going to be out right around 360, 358, 360. So 320, that's about 40 points. Initially, my 1-to-1 is slightly off, but I'm doing this because I'm trying to manage a trade, which I do tend to do. So initially, I'm 1-to-1, if not greater. I see I've got a 50-point stop right here if I'm going to go in up on the break of that candle, so I need to at least target 50 points, which would take me to 70, right? Which that we did, no problem. Once I'm moving up to that 1-to-1, I'm just going to protect my capital and move to break even, but I'm not just going to sit and let it go to break even. So I'll say, okay, well, 70 was my 1-to-1, but I'm let's say I'm targeting initially 400. Well, I'm probably just not going to let it go past 360. So I do lose 10 points there. It does come all the way back. And had I stayed in the trade and not moved at all, well, I actually would have made, right, much more money. However, this breakdown could have easily yielded us right back into the initial balance range and then just gone down, and then I would have lost anyways. And I would have been very frustrated being up, 50 points just to actually take a 50-point loss, which is why I managed. Now, if you can get in on a better trade and your loss isn't so large, your risk isn't so large, then it's a little bit different, right? There are times where maybe you only have 10 or 15 points, but you have 50, 60 points ahead of you. Sure, right? Go ahead and see how long you can let that run because your max risk is so small. But when you're trying to take, this is a very good, clean trade, yet the risk is so high, there's only two options. Or you reduce your size, right? So you don't have to manage risk. Or if you're saying, hey, I can't bear to go in on one contract, it's just not enough money in the micros for one contract. I got to go in 3, 4, 5. You don't want to lose that if you're up this high, right? I know I got my mouse over here, but I'm like, you don't want to lose all of this gain just because you think, well, it should go here. Again, don't get hopeful, right? Just let the market be. There's in this case, it simply came back just below entry just to go up higher again. It didn't have to do that. It could have easily just kept going down. Now, I don't know if there's another trade for me that I can see here. Crazy enough, I made my money, I think, a little bit further down, if I'm not mistaken. I can't really remember where I made my money at. If we look over here, you see the account that I'm talking about, I just started. And so yesterday I did 626. And so, yeah, I did at 10:05. So I was in pretty early. And I made 500 at the 10:05 time. So I waited just past the 30-minute point. And then I went in. So if we look back at that at 10:05, let's go 10:15. 10 o'clock. So I didn't wait, obviously, for the initial balance to come out. What I did here was I saw this immediate sell-off, but I was watching Bookmap yesterday, and this was a little bit surprising, this push up, but then Bookmap did start to flip, and if I remember correctly, our delta and cumulative volume delta was building. And I could see the sellers were no longer able to push us any lower. So I did start to build a move here based off of the 137 lows. I think I had to live through a little bit of this right here. But then once I got here, I was feeling really confident. I didn't know how high it would go. I did think there was going to be another pullback. So I think my 3 contract size, I think I was only in for, maybe 40 or 50 points or something like that. And then I was out. And then I was done for the day because I traded in here and already blew an account. I think I tried to buy off of an initial value area high, but had no other multiple confluences, and I did not set a stop. So hence, I dollar cost averaged in, and then it took me out here on this wick. So learned my lesson, got burned pretty bad on that one. Luckily, that account was only a couple days old, so I wasn't too worried about it. And now, right, I've got my entry list. I'll paste that over to my computer, and then I should be able to have pretty solid days. I'm still going to lose, but I won't lose my entire account because I have defined my stop and understood my risk. If you have any questions, please feel free to ask. Again, still building this channel. I see I got a couple more subscribers here. Thank you so much for giving me the shot, listening to my videos. I really appreciate it, and I wish you the best today, and I will see you tomorrow.